Now let's have a look at the cash flow statement. But before we do that, I need to talk to you about what goes in and what comes out. So cash inflows can be will largely come from our cash sales, money in that from selling our good or service. Quite often we allow our customers to put sales on account, and they will pay us at the end of the month. So when the credit sales, that's what we mean by credit sales, and when they pay us for work done or goods received, usually about 30 days later. And we also have other investments, and maybe we have a rental property, and that income also comes into this swimming pool, if you like, of water. So the more that comes in, the more profit we make in essentially. But this diagram is more to do with ensuring there's enough money in the pool to pay for payments of stock. Now this only applies to a trading business and not a service industry. Okay, we all want to pay for all our costs and expenses. Wages tends to be the biggest part for most Australian businesses, and we've got non-operating expenses and payments as well. For example, we may pay for an expansion, we may buy a new car, things like that. So essentially the thing that to remember here is that this pool of cash must be full in order to pay for these things here. Let's look at a cash flow statement in more detail. Essentially, the question we've got to ask ourselves, is there enough income to pay for expenses, wages and loans? Liquidity, and that's why we looked at a cash pool, right? Liquidity is the amount of cash that measures the amount of cash flow that flows through the business. So we've got enough money in the pool, that means we've got enough liquidity. And if the business has enough liquidity, it's said to be solvent. Solvent means that it can continue to trade as it's currently doing. Now, cash budgets are very closely related to cash flow statements. There's one essential difference. They look at the future, and they're an important tool of any business. The cash flow statement looks at what has happened to the cash, but quite often we need to anticipate what happens or what could happen in the future. We do that to identify cash surpluses. So if we've got a lot of cash in our check account and earning hardly any interest, we must put that somewhere to earn more interest or to put it to better use, maybe buy an asset or to expand or buy a new car or whatever. Quite often we need to try and manage our shortfalls, and sometimes there's a shortfall in the future if we've got lots of things due at the same time, or if we've made a commitment to pay a big loan, or if we've indeed expanded. We need to plan for that, and a cash budget is good for doing that. And as part of our planning, we may be wanting to expand or to buy something new. So can we afford that? Do we need to wait a bit longer? Do we need to get a bigger bank loan? These sorts of things that cash budgets will tell us by trying to work it out what happens in the future. Here's an example of a cash flow statement. That's the historic one. So the cash inflows is money coming in. You can see here we've had some sales and a very big income here from our three big manufacturers, but A and C are the bigger ones. Total inflows there, and from that we take away the total outflows. We can see that we've had a small cash surplus here. Right? So that has been derived by taking that figure away from that. In February we had a much better month. Inflows was 6 million, take away close to 5 million, and we left with about 1. So that was a good month, and you can analyse why, and it's essentially we got lots more money from manufacturer A. Going on to March, we had a similar amount of inflows, but we had a big increase in outflows, and that was due to lots of raw materials that we purchased. You can see how that went up from 3 million by 1 million to about 4 million, 4.7 million, which in this month has meant that we've had a deficit. Now, minus figures in accounting are represented by these brackets, as you can see. Okay, we don't put a minus in front of it, but we have brackets, so that's accounting speak for brackets. Now again, I'd like you to stop, go to page 239, and these questions here. Extension 1 is a very relevant one. I'll be asking you to do that in class when you get back.